Hello, everyone, and welcome to this analyst presentation. I am Hadi Dwiri, and I'm the founder and CEO of Mutandis. First thing to notice about the first half of 2022 was that we were able to show sharply higher revenues and a good growth in EBITDA and net income. Basically, revenues are up 48%, and the good news is that volumes are growing for most categories. We have been raising our selling prices several times since the fourth quarter of 2021, and in spite of that, our good news is that volumes are up in almost every category. And this first half is more a volume growth than a price growth, because prices will fully impact us in the second half, as they've been increased very gradually all over the first half. The second thing to notice is EBITDA. EBITDA is up 16% in spite of the extreme increase of raw material prices. Obviously, EBITDA includes season EBITDA in the US, and it has been the biggest contributor in the growth of EBITDA in the first semester. Again, the idea is that price increases had to be gradual, step by step, in order to make sure that volumes did not decline, which is why most probably, the first half of 2022 will be the lowest margin period in this cycle of very sharp raw material price increases, as the full effect of our price increases will only be felt in the final half of 2022 and even more in the final quarter of 2022. Net income growth is faster than EBITDA's growth, and it is due to stable amortization costs. And this has been achieved in spite of higher financial expenses related to the season acquisition debt. So all in all, it's been a very good first half of 2022 for us, with higher EBITDA, significantly higher net income, and a very strong growth in revenues, mostly pulled by volumes. If we focus now on the revenues and exclude season at constant scope, because season was only consolidated from August 1st, 2022. So if we 2021 in our financials. So if we exclude seasons, revenues are up 14% versus H1 2021, which is good news because it's mostly a volume growth. If we zoom on home care categories and products, our own brands revenues are up 10% over the first half, which is a bit above trend for this category. And it's been mostly pulled by the machine powder, which is a new category for us. We entered in February of 2021. So we had a full year in 2021 almost. And our second year is 2022. So this is pulling the growth in own brands. And also the dishwashing liquid, which has been completely revamped, new formula, new look, new product, and pushed very strongly with an aggressive pricing, which has helped pull our overall own brand revenues. If we talk about volumes, then home care volumes were up 8%, which is a very good figure for the Moroccan market. Let's focus now on seafood. Seafood is up 27% in revenues over the first half. And this time, it's not volumes, it's mostly higher selling prices. So it's been much easier for us to increase selling prices in sardine cans worldwide than it has been to increase home care prices in Morocco. So we've been a little bit faster in raising those prices, but nevertheless, some of the price rises only were achieved by April and May of 2022, so their full effect still is to be expected at the end of the year. The same period, H1 2022, was very favorable in terms of fish supply, so we had significantly higher byproduct revenues for a total revenue increase of 27%. If we look at bottles and caps, here the volume growth has been surprisingly strong, so much that we believe there has been some customer security inventory increase because volumes were up 22% over the first half. So most of it is due to the end of COVID restrictions and tourism back to Morocco. But some of it is probably inventory build up at bottlers level. H1 revenues are up 8%, but actually they're up 60%, 20 in volume and 40 in price increase. If we exclude a raw material sales that was achieved or recorded in the first half of 2021. The fruit juice was the weakest category in the first half. It was weak because a major player in milk and dairy products in Morocco entered the fruit juice category and took market share from every single producer and brand. The boundary reopening is helping us with tourism and the sales to airlines, but this is offset by lower exports of fruit juice to African markets, notably, because of higher prices. If we look at season now, so as I said, season was only consolidated from August 1st, 2021. So revenues in the first half were 235 million dirhams. That's up 17% compared to H1 2021. And so it's a strong growth, and it's not a price increase growth, it's mostly a volume growth. I'd say maybe in the 17% there is 4-5% in price increase, which only occurred in April of 2022. And the rest is really volume and demand growth for seasoned products. So very healthy growth, and we're perfectly online with our expectations. If you look at EBITDA, as I said previously, it's pulled by the consolidation of season for sure, and we're dealing with an extreme level of raw material prices and transportation costs that we're trying to offset by gradually raising prices and also modifying the product. We made significant change to our R&D formulas in the home care business to lower the cost of producing the product, and we are still increasing prices. We raised prices in December, then again in 1st of June only, so no impact almost on the first half. Then we are having a price increase this summer of 2022, and probably another price increase in the fourth quarter of 2022 to help margins go back to pre-COVID levels by the end of the year. Nevertheless, it's a good achievement to have a 16% EBITDA growth. Net income is up 31%, as I said previously, because pulled by the EBITDA growth and in spite of higher financial expenses. If you want to look at the adjustment to from net income to recurring net income, that adjustment is about 4 million dirhams. It's mostly a custom duties repealed by the Moroccan Duty Administration. It's job terminations, indemnification, and an array of smaller impacts for 2 million dirhams. Quick look at the balance sheet. The bank net debt before the season acquisition was about 400 million dirhams. Then we bought season for 400 million. Then we raised some equity for 300 million, and we are in the process of paying the capex that had been decided even before the season acquisition, which is a 300 million dirham investment program to build additional factories and to start new product ranges in our portfolio. So basically, debt is at the end of the year was about 750 million dirham, January 1st. Now it's down to 568 because we had that capital increase at the stock exchange, minus the capex that we have been dispersing, 110 million of capex, as you can see on the right chart in the same slide. And the net debt, we will continue spending in capex in the second half. and the net debt should continue growing and reach again the 750 million that it was in January 1st of 2022. This is our peak year in capex. We should be spending 280 to 290 million dirhams in capex to complete the new factories program. Good news for us, the pictures that you are seeing in this slide are very old pictures, and the factories are completely finished now. We are just waiting for the tools and the machines to be delivered by the manufacturers of machines, and we hope to be installing and tooling the factories between October of 2022 and December, January of 2022. As you remember, we've been building 3 new factories. One is for personal care. The second one is to increase the size of our home care business. And the third one is a brand new fruit juice and soft drink factory that will allow us to close a very old factory with not good performances in terms of margins. Couple of new launches. You remember a year ago we entered for the first time the machine powder category. That means the powder for the machine, and not the hand washing, but the machine washing. It's a large category in Morocco, growing category we were not at all playing in. So Magix Matic, that you can see on the left side of the slide, is the powder for the machine, and it's doing very nicely. It's growing year after year. 2021, 2022, and we're quite happy with the performances we're achieving. Our target is to reach 10 to 15% market share in a category which is about 1 billion dirhams in total size. Then, most recently, a couple of months ago, maybe, we launched the liquids for the machine, and that is a higher end product. And it's a smaller category. It's about 250 million, 300 million dirham. The powder is 1 billion, the liquid 250, 300, but it's growing much faster. And so we just entered with the Magix brand this liquid for machine. We also launched during 2022, during the first half, we entered the 5-liter big format in both bleach and surface cleaner. The 5-liter is growing fast, is taking market share from the smaller 1-liter format. It's less of a margin than the 1-liter, but it's bigger in volumes, or it's growing faster, I would say, because it's cheaper in per liter pricing for the consumer. So this will allow us to grow in volumes too, in bleach and in surface cleaner. We had never been able to enter the 5-liter because we just did not have the space and the size in the factory to add a new 5-liter production line. The calendar as revised is as follows. Personal care products are completely ready, but for receiving the tools and tooling the factory. So we should be in a position to launch by December 2022 or January, February of 2023, as the product is completely ready and has received very good ratings by the consumer. The sardine spread, same. The qualitative consumer studies are completed, and this time we succeeded. We had failed a year ago, so we took our time to find good recipes liked by the consumer. So we still have a quantitative survey starting in October 2022, and hopefully we should be in a position to launch also under the Marine brand in the first quarter of 2023. The tool and the factory are ready for that. A new range of drinks for the French market under the Marrakesh name. Marrakesh is a very strong name in France because of tourism. So the new range of drinks for the French market is absolutely ready, and we're in the process of identifying a distributor in France who will deal with the supermarkets and hypermarkets of France with our products. And then the final one is the protein powder that we derive from our fish byproduct, and that we are asking for permission to start construction of the factory in this September of 2022. And if we get the authorization in like a month or 2 months, then you have to expect that a year or 15 months after, the factory will be ready to operate, allowing us to take our byproducts and add an additional margin before selling this protein powder internationally. The guidance that we are offering the market is that we are sticking to the figures included in the secondary documents that we submitted to the stock exchange in January of 2022. Please note that at the time when we made those forecasts for 2022, Ukraine had not been invaded yet by Russia. And despite the extreme movement in raw materials following the invasion of Ukraine, including on vegetable oil, edible oil that we include in our sardine cans, for example, or also on all raw materials, in spite of that, we have been able to adjust and react, and we believe we are still online with the forecasts as published in January 2022, meaning that if raw materials stabilize at their June or July levels and they stop increasing, we should be in a position to show a very strong growth in revenues, both in volumes and in unit prices, and a higher EBITDA and higher net income for 2022 compared to 2021. Finally, our next meeting will be on November 11th for the release of the third quarter financials. And in the meantime, please do not hesitate to contact us directly at Mutandis, myself, or our group CFO, Fatim Mediouni, to ask any specific questions. We'll be at your disposal. Thank you very much for being with us, and talk to you soon.